Thank you for joining us on Black Investments Matter. I'm Antoine Anderson. It's that time of the year again, time to reevaluate that escrow account. See if you have a shortfall and see if you can turn that shortfall into a windfall by doing this one simple thing. It is time to come to terms with the fact that if you are a homeowner in America, you are getting cooked in this hot economy. What we're seeing is something unheard of. We are seeing increases in both taxes and insurance in the order of 10, 20%. In the situation with the insurance agencies just charging more for everything, even if you don't live in a disaster zone like Florida, you are going to see the effects of climate change that no one believes is happening on your home. As we're coming on the air, there was flooding in Leominster, Massachusetts. I'm in Georgia. We have been very fortunate this year not to get hit by a major hurricane. But anytime you're seeing rates grow at a 10% clip, it is going to have a profound effect on what you are paying for your mortgage if you have an escrow account. First off, what is an escrow account? A mortgage escrow account is basically the amount of money that your lender is going to require you to maintain or pay into, in addition to the principal and interest of your loan, to cover the cost of ownership of that house. That would include the property taxes and insurance. Now, property taxes are one of those things that you really don't have much control over. These things in some states, depending on where you live, have to be voted to be increased. Others are fixed. It is very variable. The property tax in one state, like Kentucky, for example, is only $33 average. But when you talk about states like Massachusetts, it's getting closer to $2,500, $2,600 right across the state line to New York or Connecticut. You're looking at about $3,000 a year in just property taxes. The rest of that escrow account is your insurance, your homeowner's insurance. There has been an increase of 10, 15% in just the last year, just based of inflationary pressures. To try to cap that, there's one or two things that you can do. Now, one of those things that I did recently was look closely at that insurance that I'm paying. If you are now at the tail end of the year, you have probably already paid most of what you are owing in insurance for your home. If you go back and if you have any wiggle room in the amount of deductible that you have to pay on your particular policy, if you can increase that deductible, that will have a super effect on what you actually owe because you've already paid that money out. Anything you cut, if you raise that deductible, it will have an adverse reaction to the amount of money that you're paying in escrow. I tried it and I saved myself about $300. Now that might not seem like a lot, but if you are really tight, as many people are in this economy, it might be something you want to look into. Of course, there are some downsides to it. If you live in a hurricane-prone state like Florida and sometimes Georgia, and you have some out-of-pocket expenses that come from the damage of these storms, you're going to pay that higher deductible. But those are one-time fees. Doesn't happen every year, but you are going to have some damage. Weigh the options. Sometimes it may be better just to not touch it, but if you are looking at the possibility, as many people are in this escrow shortfall, of either coming up with the shortfall amount immediately or being faced with an increase that could be $100-$200 per month for all of next year. You have a limited time to do this. Please check with your financial advisors. Go ahead and see if there's some wiggle room. What happens and where the windfall comes in is if you can negotiate, like I did with my insurance company, get a quote on how much those changes will do, that insurance company will cut you a check for the difference. Again, I was scheduled to pay, say, about $2,500 a year. By saving $300, the difference was sent to me. Money's already been paid to your lender. What they're going to do is cut you a check. Check into it. It may be something worth looking into. I'm going to post a link to the Yahoo article that showed this. It's definitely worth looking into if you are looking to save a dollar. As always, thank you for watching. Remember, time is money. Not all money is good money. Watch how you spend it. I'll talk to you later.